What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Decoded. Today is Monday, January 29th, 2024, and this is how we traded SPY today. Now, again, let's go back to pre-market. So here we are in the pre-market. We are setting our levels in pre-market. Okay, so we're looking at 488 to the upside. So 488, keep that number in mind throughout the day. So that's the pre-market high, 488. We've got the downside at 486.95. So we literally have about a little over $1.05 from the bottom to the top. We got a couple of zones in here. We've got a strong 30-minute zone in here from a couple of days ago. So you can remember that 487.42 played out from last Thursday. It also played out from last Friday. So I decided to go ahead and put a line there on my chart because, again, that was a strong level. Now, the next level up we're looking at is 487.58. So again, this was another really strong zone from the last couple of days last week, so Thursday and Friday. Now, we had a 5-minute double bottom down here at about 487.54 from pre-market, so 487.54. So because that 30-minute zone is going to be, obviously stronger than that 5-minute double bottom, I thought I would just go ahead and put it at that 487.58. So there it is. Now I've also got, a 30-minute demand zone from Thursday. I was looking for something low, in case we sold off. You never know what's going to happen. No bias whatsoever. And let's talk about bias for a second. So bias, when you have a belief that the market is going to do one thing, you are more than likely going to play it in the direction that you think it's going to go. Now, the problem with that, with a bias, is that, think about this. Wall Street and Main Street are two totally different things. So you could really be feeling the pinch of the economy right now. A lot of people are feeling the pinch from the economy right now. It's not necessarily doing great, but Wall Street is doing absolutely amazing. So, a word of caution, or words of caution, do not let your bias determine how you trade the market. Okay, it will, in a word, destroy you. It can destroy you. Bias hurts people every single day. We had people that were hurt in the market today because of that very bias. So let's get into the trading day. Here we go. So right off the jump, we had this cross. In pre-market. So we had the cross in pre-market, running up. And again, we're going to watch that 487.58. So 487.58 back to the upside. Breached this a couple minutes into the day. Actually breached it. On that first candle, I was expecting a little bit of a pullback. It did not pull back. Went up and took out our pre-market high. So that was really nice. So you're thinking, okay, pre-market high. It took out pre-market high. And a lot of times what it does is it takes out that pre-market high. And then it goes to search for the pre-market low. So this is where the bias can come in and absolutely destroy you as a trader. You're thinking, okay, we took out the pre-market high. Let's go ahead and short it at this level. We'll buy puts at this level. And we'll ride it down to pre-market low. Guess what? That's your bias. That is your bias, thinking, okay, we had sellers there from last week. We had sellers at that very level from Friday. Let's just go ahead and play it back to the downside. Again, bias will destroy you as a trader. So watch your levels. And again, trust the 9. Whatever the 9 is telling you to do, trust the 9. So we actually had on one of these candles what I call a death cross to the downside. So a death cross happens when we breach the 920 and VWAP back to the downside. But look at this level right in here, this 487.75. We didn't get a close back below that. So at that point, it's like, you know what? I don't know if I necessarily trust this thing to the downside. Plus, where's my risk? How do I define my risk on this particular play? Well, I mean, we've got this candle up here that we opened on, 487.88. Yeah, you could potentially, trust that level, or maybe a swing high in here. But actually, our closest level of risk is going to be up here at 488. So 488 back down to 4. That's 25 cents. So it's not a real big deal. But at the same time, trust your levels, folks. Trust your levels. Trust what your levels are telling you. So made a little run back up, had this cross back to the upside. I did not take this. Obviously, you can see the smile, actually a frowny face up in here, guess what? I took this trade back to the upside and let it run up, let it run up. I thought we were going to go up. We had another demand zone up there, way up here at 488.74. Guess what? Did not get anywhere close. So I was waiting and I was looking, okay, if I breach this 9 back to the downside, I'm going to take myself out of this trade. I switched screens for literally a minute, and guess what comes along? Double cross to the downside. So double cross happens when we open above the 9 and close below the 20. This particular play had a couple of things going on. We opened above the 9, closed below the 20, and breached 488 back to the downside. Now, by the time I was able to get out of this trade, I took a loss, obviously. It was too late for me to get into the trade. So again, really, really nice setup off the top, because again, we crossed the 9, we crossed the 20, and we breached this old support. So it becomes new resistance at that point. Back to the downside. Now, if this trade goes against you, this is all the risk you have. So down here on this candle right here at the bottom, so we have 96 up to 488. That's literally 4 cents worth of risk, maybe a little bit higher if you want to swing it high just a little bit. But that's our risk. So when we talk about predefining our risk before we ever enter a trade, that is exactly what we're talking about. We have to know exactly where we are going to get out when the trade goes against you, because guess what? Trades go against us all the time. If you execute according to your trading plan, you will have losing trades, period. I mean, that's just the way it is. There are no two ways about it. If you execute, you are going to have losing trades. You can have the perfect setup. Everything is setting up perfectly for you. You execute, and guess what happens? It goes against you. That is just the reality of the situation. Again, not in on this trade. Would have been nice to get on this trade, but again, I was not in on this trade. Very, very low risk. Now, what we're doing on this play is we are shooting for targets at this point. So again, we're going to use the 9 as our resistance, and we are shooting for targets. So our first target low is that 487.58, followed by that 487.42. And remember, these are still strong zones left over from last week. So there are still buyers, there are still sellers. Remember this, folks, the market has a memory. The market absolutely has a memory. That's why, as traders, we use technical analysis. We use technical analysis to get us into trades and get us out of trades. Okay, so anyway, didn't take that down back to the downside. Didn't take any of these really, really nice moves back to the downside. Didn't take this back to the downside, but I did, however, wait until we breach this 487.42 back to the upside. Double cross to the upside again. Double cross to the upside through a known level of support. So we've got that support right there, 487.41. So we're going to ride this thing as high as it'll take us. My target on this was VWAP. I was targeting VWAP. I wasn't targeting 488 because I knew that I had all of this resistance over to the left. So I figured, you know what, take a small play. Nothing big. Back to the upside, close it out at VWAP. Now, because we have a community with hundreds and hundreds and hundreds of people, I'm constantly communicating with all the different members. You know, what do we do here? What are we looking at? Kind of giving a play-by-play as to what I am seeing. Different levels of support, different levels of resistance, and obviously what we are doing against the 9. And if the 9 is above the 20, 9 is below. At any rate, just giving a play-by-play of what's going on. Again, missed this continuation play to the upside. Places to re-enter this trade. Look at this. We are above VWAP. So above VWAP at this point, what are we shooting for? We're shooting for this level up here, 488. Nice play to the upside, but again, I wasn't in it. Would have been nice to have been in it, but again, I wasn't. You know, I could put a bunch of smiley faces and go, oh, I caught that one, or I caught that one, or I did. I would rather be honest and upfront about it and say, you know what, I didn't catch any of these plays, and that's okay. That's okay. Now, because, and here comes that bias again, because we had $1.05 worth of movement, you know, throughout the day, I'm thinking, you know what, it's probably not going to do too much. But it might. You never know what's going to happen. So again, breach at 480 to the upside. Nice little plays, you know, bounced around. And remember this level 488 even money. 488 even money. Bounced around. Had some small plays back to the upside and then crashed right back down to that 488 or right around that 488 level. Now, if we look at it from a 5-minute standpoint, This is what we're looking at. Look at all of this support on the 5 minute. Now we had some wicks down. We had some wicks down that took us down to VWAP. Breached the 5 minute POC, but never got a close on a higher time frame below that 488. So when we have double bottoms like these, you can assume, okay, and rightly so, you can assume that the support at this level is absolutely rock solid until it proves to not be rock solid. But we're going to assume really, really good support off that, off that 488 even money. So guess what we're doing? Again, 488 just kind of bouncing around. Nice little play back to the upside here. Nice little play. Again, we still have this 30-minute supply zone up here at 488. What is that? 488.74. 488.74. We seem to be the last couple weeks kind of fixated on 74s and 42s and kind of these crazy levels. But again, that's what we're shooting for, because remember from Friday, that's going to be a supply zone sitting up there for 88.75. So again, bounced around, nice plays to the upside. Really, really nice plays to the upside. Beautiful. So here is the benefit of watching these levels and trusting the 9, folks, and trusting your specific levels. You have this move to the upside, a move to the downside, and then it stops. So guess what? We're gaining more momentum. We didn't even have to get back down into this 488 demand zone down here. Guess what? We stopped in here, 488.13, ran it back up, double cross to the upside, okay, in an otherwise uptrending market. So at this point, what are we looking for? We're looking for that specific supply zone up top. So 488.74. So again, remember that 488.74. Now, here is where another bias comes into play, folks. Your bias says, you know what? We've got that supply zone sitting up here at, again, 488.74. I'm going short. I'm buying a bunch of puts. We're going to reach. We did it before. We rejected off that level before. We're going to do it again. Guess what? Kept on pushing up to the next supply zone up here at 489.02. And remember, this is another supply zone from last Friday, 489.02. And at this point, you're thinking, you know what? It's got to come down. It just absolutely has to come down. You know what? No, it doesn't. Wall Street and Main Street are not the same. So we're going to push over here. Again, bounced around between these zones. So what we're going to do is, again, we're looking at this 488.75. This is our level of risk if we're thinking about getting into calls. Because again, when we are uptrending, we're looking for reasons to get into calls. We can counter trend trade this, but at your peril. Again, we want to follow the trend as long as, if we're trending up, we want to follow the trend until it proves that we have changed direction of the trend. Okay. Or if you're at a very, very known level, you breach a level to the downside, know exactly where your level of risk is. Okay. Nothing, no crosses back here to the downside, had a cross over here. Now you could have played this double cross to the downside with the expectation that we're going back down to 488. And if it doesn't get there, hey, where are you going to get out? Well, you got a double cross to the upside. That will take you out 100% of the time in an uptrending market, because we failed to get back down there to that 488 even money. So what do we have here? So now the high at this time, the high of spot was 489.12. We got to 489.11, just got right up there. I'm thinking, you know what? We could potentially take a scalp. We could take a scalp up here from 488.93. See if we can punch that 489.12. You got, I don't know, what do you got? 20 cents? You got 19 cents in the move? It's okay. I mean, that's decent. Late in the day, you can get contracts for cheap, so you can load up and go to town. But you know what? The market wasn't done. The market was absolutely not done at 1500. So exactly at 3 o'clock this afternoon on the Eastern Seaboard. So 3 o'clock market time. Look at this. It just ran and ran and ran and ran. It just followed that 9. Again, we have no historical context over here. There's nothing over to the left, folks. There's nothing. We don't know. There's nothing over there. There's literally nothing over there. Where do we get in? Well, I mean, your best places for getting in is, test the 9 to the downside, recapture the 9 back to the upside, take a play to the upside, and there you go. Run, 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 run. Now, this level up here, this 490.54, that's based on a 5-minute, I think it was a 5-minute double bottom. We can confirm that way up here. Again, 5-minute double bottom, had to breach that to the downside to make any money on puts. But again, strong, 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 strong move to the upside. I didn't put any happy faces in here. I scalped it a couple of times on the way up. Made a little bit of money. But again, short scalps, very, very short scalps. Now, as traders, as emotional beings, what a lot of traders do is you see a run like this and you want to catch this run, okay? The problem with doing anything like this, the problem with trying to catch a run on a big candle like this or 2 big candles in a row like this is invariably you get in at the top. And I can only say that because guess what? I've done that. I've done that more than once. And it's not the way to get in. So if your edge presents itself, put on the trade. If your edge does not present itself, do not put on the trade. Do not chase. We are not dogs. We do not eat out of a bowl on all 4 while wagging our tails. Folks, do not chase trades. It is better to miss a trade and wish you were in it than chase a trade and then wish you were not in that trade. But again, I took a couple of scalps up here. But again, not on these big candles. I'm waiting for pullback, scalped it a couple of times back to the upside. Again, decent plays with really, really tight known areas of risk. Okay, so right down here, 490.03. Bounce back off that to the upside, caught it for a couple minutes. Again, nice plays to the upside. Now, let's talk about this, this supply zone again from last week, last Friday. I talked to a buddy of mine after close today. He asked me, how did you do? I said, well, I wasn't in on the big run, but I caught a couple of scalps to the upside. He says, I know a lot of people that got absolutely destroyed on this play. Why? Well, because we had a supply zone at that level right there, 489.02. And again, there's no way it can go higher. There's absolutely no possible way it can continue going up. Guess what? That's not based in reality. If you think that's reality, that it can't go up, I'm going to give you a date. The date was February 24th, 2022. Go back and look at SPY. SPY ran down about $10 in pre-market. And everybody thought, you know what, we're going down, we're going down, we're going down. Guess what? It did not. It ran up $18 during that day. I went either 6 for 6 or 7 for 7 that day, scalping calls because of my fear and my own bias that it can't go higher. Guess what? It can always go higher. It can and often does. Same thing with to the downside. It can't go lower. Guess what? It can go lower and often does go lower. So again, trust what you are seeing on the chart. Again, lots of people got destroyed at this level because they're thinking, you know what? We got this to the downside. Supply zone, sellers still sitting up in that area. They're going to run it down to at least, this 74 and probably this 488. It didn't happen. It ran up. People got destroyed today. So if we look at the chart as a whole, it was a tough day to trade this thing. I mean, it was really tough. I mean, there were periods in here where you're thinking, are we going to be able to do anything? Is there anything for us to trade? Folks, some days are better than others. Late in the day became really, really good or really, really bad. Depends on your perspective and depends on how you are trading it. If you were trading a bias, it is very likely that you got hurt today. If you are trading the chart, guess what? You might have done at least marginally okay today. But anyway, that is how she played out today. Oh, let's talk about that 350 candle real quick because it is right in here. Right there, green candle, close to a double cross to the upside. But again, pullbacks, ran a little bit up into close. Not a real big 350 candle. And you really can't expect a big 350 candle after a big run up like this. But anyway, that's how we traded SPY today. Now, if you enjoy our videos, please go ahead and like and subscribe. We'd love to have you as a subscriber. Consider giving us a comment and a share with your friends. That would be awesome. Now, if you're interested in live daily trading, so live daily trading every single day, bell to bell every single day, head on over to our Discord server. It is called Trading Decoded. We're going to give you that first week for free. Check it out. A lot of folks in there, and by and large, everybody really enjoys the community aspect of it, the teaching aspect of it, and the fact that we're not going to charge you $10,000 to join the group. No, it's not like that. It's not like that at all. So anyway, head over to, and the link for that is down below, so go check it out. Now, if you are interested in the 920 strategy, head on over to 920trading.com. So at 920trading.com, you will have the entire strategy at your fingertips at no cost to you other than a little bit of your time. So head over there. Also, we've got a newsletter that comes out on Saturdays. Go check it out. See what you think. Love to have you as a member. And again, thanks for spending a little bit of time with us today. I hope everybody had a good day, but above all else, I hope everybody followed their trading plan today. So we're going to do this again tomorrow. Hope everybody has a great rest of the evening, and I will see you in the markets.